Okay, in this video, I'm going to be breaking down Theta token. I'm going to show you the patterns that I see on this chart right now. In fact, there's multiple patterns totally separate, but actually might be blending together. I'm going to show you what both of those are, where I think price is going, and what my buying strategy is. If you like content like this, make sure you hit the thumbs up button. I appreciate that, and subscribe for more content like this. Let's go ahead and jump in. So we've got Theta token on a weekly time frame. This is also on a logarithmic scale down here at the bottom. I'm looking at these crypto charts on a logarithmic scale just because I'm able to see some of the patterns a lot more clear, just because the prices, they just run up like crazy and it's hard to see it sometimes on this linear scale. So I bring it up to the logarithmic scale, and some of the patterns that show up actually show up a lot more clear. And so, as I mentioned in the beginning, there are two different patterns that I'm seeing with this. I mean, there's multiple patterns, but there's two big ones that are kind of combining with each other and actually supporting each other, which actually gets me really excited. So I'm going to break them down each one by one and then show you how they both combine and actually support each other. So the first one is here. I've got a couple lines drawn. And so I've got these lines drawn. It kind of looks like this megaphone type thing. And so that actually is an expanding diagonal pattern. That is one of the main patterns inside of Elliott Wave. And I am an Elliott Wave trader. I like to use Elliott Wave to analyze charts. Just for how my brain works, I've been able to see and recognize Elliott Wave better than any other type of way or method of doing technical analysis. So price does move in waves. It doesn't go in one direction all the time and all the time only. So it moves in waves, and Elliott Wave accounts for that. And this pattern right here, the expanding diagonal, is a form of an Elliott Wave pattern. It is a 5-wave structure. As you can see over here in this diagram, we have wave 1 coming up, 2 going back down, 3 going beyond the end of wave 1, 4 coming back down to create this lower trend line, and 5 breaking out past wave 3. And when you put all those 3 together, it kind of creates this cone, this megaphone type look, and it's expanding, it's broadening. So it's one of the patterns that to me is really easy to spot once you can understand what this looks like and what to look for. So on our chart, let me go ahead and draw in some of these waves. So we would have wave 1 here, wave 2 coming down, wave 3 going up, and then wave 4, which we just completed a couple weeks ago, and then we would be in the start of wave 5. And so if you look at that pattern, that looks very similar to what we have right here. So what does that tell us? Well, we can look at this pattern and see that if we know, actually, let me break down this a little bit further. We know that for this pattern to be valid, wave 5 needs to be the largest wave. It needs to be larger than wave 3, and wave 3 is larger than wave 1. In the same way, wave 4 is also larger than wave 2. And that's basically what we have here. Here we have short little wave 1, large wave 3, and then we're expecting this wave 5 to be pretty large. And one thing that gets me even more excited about the start of this wave 5 and where it's happening is this bullish engulfing pattern. And so if you've been watching my videos, you've seen me talk about this expanding diagonal pattern and how it's showing up on all of these different cryptos. But then you've also heard me talk about the bullish engulfing candle. And this particular candle formation is where you have a red candle and then you have a green candle that basically is taller than the red candle. And so it fully engulfs the previous candle. This green bullish candle fully engulfs the previous candle before it. In fact, in this case, it almost engulfs, it does engulf the previous 2 or 3 or 4 candles before it. And that is a bullish sign. Now, every time that you see one of these candles, it doesn't mean that price is automatically going to reverse or that it's going to continue going in the bullish direction. It does increase the probability though. If you also have this bullish engulfing candle near an area of support or towards the end of a wave, that also increases the probability. And so when we're looking at this larger expanding diagonal pattern, that's what gives me more confidence when I see this right here, this bullish engulfing candle at the end of this wave 4, to where I think price is going to continue to go up for wave 5. In fact, if you see at the bottom of wave 1 and the start of wave at the bottom of wave 2 and the start of wave 3, we actually got a bullish engulfing candle. And even though this one looks a little small, the body of the green candle still engulfs the red candle. This total range of the green candle still engulfs the red candle. And what do you see? We see price turn around and go in the upward direction to create wave 3. So again, it doesn't automatically mean that price is going to reverse, but it just increases the probability. So I'd like to see that right there. Now, in terms of where wave 5 can go, as we already stated, wave 5 needs to be larger than wave 3 in order for this pattern to be valid. So there's a way that we can measure what our minimum distance needs to be for wave 5. And I like to use that because it gives me a price target with this pattern. So to do that, we would use the Fibonacci trend-based extension tool. We'll use this, and basically we will measure wave 3. We'll click at the bottom of wave 3. Then we will click at the top of wave 3. Now we have our measure. Then we can compare it to the start of wave 5. And so we'll click right there. Now we have these different levels on this tool. And so if we look at the levels and we see this one level here, it's got this one value. That means that at this level, if we started here, that at 1, wave 5 would be the same length as wave 3. Any of the levels below would mean that wave 5 is shorter than wave 3. And of course, if anything is above that, then that means that wave 5 is larger than wave 3. So for this pattern to be correct, we need wave 5 to at least come to this one level, which is sitting at 7, a little over $7 per coin. And so right now we're sitting at $1.63-ish. So let's measure that. If we have a minimum price target to around $7, that's still between a 3 and 4x on your money from where it is right now. So do I think that's where it's going to go? It could. It totally could. But I actually think it's going to go a little bit further than that. And again, I'll say this repeatedly, but this is all for entertainment purposes. This is not financial advice. I highly recommend you do your own research and analysis. And I put out these videos just sharing what my analysis is, and hopefully you can learn from this, but of course, do your own due diligence. So in that case, I actually think that this is going to go a lot higher than 7. And one other way that we can measure wave 5 is sometimes we can look for the 1.618 level. So we know at a minimum, it needs to come to 7 in order for this pattern to be valid, but we could look for the 1.272 level or the 1.618 level. And so if we have this trend line here, it's touching wave 1 and wave 3, so that creates that upper trend line. And if we draw in this wave 5, this looks like it could be right along the trajectory to where it would hit the 1.272 level. It could even go a little bit beyond. Sometimes these patterns have what's called an overshoot in wave 5. It actually goes beyond this trend line. And so that's why I think it could also go to the 1.618 level. And in a minute, I'm going to share with you the other larger pattern that I see on this chart. And it's also going to give me more confidence to say that it's going to go to the 1.618 level. But in that case, if we were from right here at around $1.60 and change up to the 1.618 level, which is around 23, then that would be a 14x return on where we're at right now, which is pretty crazy to me. And we've seen it happen in crypto, but it's just kind of interesting to look at some of the chart patterns and see, hey, this is actually possible through some of these patterns that are showing up on the chart. And that would also pass all-time highs. And if you ask me, I think we still have plenty of time to get there. It's not like, oh, price has to go from $1 to 23 in like 2 weeks. I still think we have several months to go in this next bull run. So there's plenty of runway for it to get there. So let me transition to the other pattern that I'm seeing on the chart. So I'm going to go ahead and delete some of those drawings. And even though this is not part of the next pattern, but you see we have this nice trend line here and we have a nice break. That's also a good indication of a potential reversal. So that's just a bonus. That gives me more confidence. But here's the other pattern that I think we're seeing. I think that we are seeing this pattern right here. And if you've been watching my videos in the past week, you will see that there's other videos and other cryptos that I've done analysis on with this same exact pattern. And that pattern is the cup and handle reversal pattern. This pattern I keep seeing inside of crypto right now on these different altcoins. And if this pattern plays out, then we're looking to see some massive gains over the next several months in this next bull run. And of course, there's no guarantee that that actually happens, but through our technical analysis and forming a bias, forming a hypothesis, we can take advantage of what we think is going to happen. We can make a bet. We have our probabilities. So that's what I'm doing here. So in this cup and handle pattern, we have price that comes down and it basically makes a large U-turn through these zigzags, but then we basically draw a line, a rounded line, which ends up being the bottom of a cup, kind of like a coffee cup or even a bowl. And then it starts to get back up to this level of resistance. It creates kind of like a half circle. And when it does, it hits resistance and there's a little bit of a pullback in what's called the handle. That creates the handle of the cup, where you would grab it to take a drink. And usually after that handle is formed, then we get a large breakout. So if you are looking on the chart right now, let me do a better job of drawing this. We have this rounding, which is the cup part. This right here, these zigzags back and forth, it's not a perfect half circle, but it's got this rounded formation to it. And it doesn't always show up perfect on the charts, but when it shows up like this, then we also have the handle. That gives me confidence to say, hey, this could be a cup and handle pattern, just like we're seeing right here. So we've got that roundedness and we even have this pullback, which is the handle. And so let's take a look even further. Let me delete this part right here. Now that we know kind of what we're looking at. So here's our level of resistance right here on these two candles. That's our level of resistance, which is sitting right around $4. Another psychological level, $4, a whole dollar level is a psychological one. So then we have the rounding and then we have this pullback, which is a handle. But then what do you know? We have a bullish engulfing candle, that same bullish engulfing candle right here. And again, it's like, okay, if price is coming down in the form of a downtrend, and then we have this bullish engulfing candle near where we would have support, where there's plenty of support levels right in here. And when we're looking at the cup and handle pattern, even though this pullback is a little short, there's definitely times where it can come a little bit deeper like it has here. And so when you see that bullish engulfing candle towards the end of a pattern or a wave, to me, that just gives me more confidence or increases the probability that this could be a potential reversal. We could see this pattern play out. And if we were to see this play out, then we would look at this pattern and we can actually find a minimum price target. So we would do that by measuring the top of that resistance. I like to call this like the lid of the cup. We would take a measurement from there all the way down to the bottom of the cup. And then we would basically duplicate that and put it over top, right on top of the lid of that level of resistance. And that distance would create the minimum price target. So let's go ahead and do that. You can do that by using the price range measurer. And so I'm going to take the measurement tool here. I will come down here. That's going to give us the measurement from the lid to the bottom of the cup, and then we'll place it right on top, just like so, and that gives us a minimum price target. Now, we said before, using our other pattern, the expanding diagonal pattern, this one, that we could potentially see price go to the $23, $24 range. And so let me actually just pull up that Fibonacci extension tool that we had. Boom, boom, boom. And so there's two price targets that we have here. And so I actually think that we could see price go somewhere in this range, around the $20 to $25, $26 range. Now, just because these two price targets are near each other, that doesn't mean that it means it's going to go there and can only go there. I'm just forming my hypothesis and analysis. And if both of these patterns played out, then both of these could be hit. And so that's kind of how I'm seeing both of these blend together. And so just to jog your memory, again, we have the expanding diagonal pattern with the waves 1, 2, 3, 4, and 5. I think we can definitely go there. We have the cup and handle pattern, which is forming. And if this wave 4 really starts to take off, then that would definitely look like this cup and handle pattern. And if we have this wave 5 take off, that looks just like the expanding diagonal pattern. So that is pretty crazy to me. I know there's a lot going on the chart right now, but I wanted to make sure I showed you how two totally separate patterns could potentially play out and meet in the same area as far as a price target goes. And what you'll find through technical analysis is that sometimes you might have a pattern that would contradict the other. But in this case, these two would actually complement each other if played out the way that they are in a textbook example of that. So when it comes to where I'm buying in right now, folks. I am buying in right now. And if I haven't mentioned already, make sure you do your own research and analysis. So I'm buying in right now. I'm dollar cost averaging right at $1, $70, $60 something. I'm just continuing to buy in, especially as this wave 5 continues to go up. And I don't think I'll be doing any selling until I get to that $7 range, just because I think that's the minimum price target for this crypto, for Theta token. And so I'll look to take some profits, maybe above 7, but maybe more at around 12 at the 1.272 level. And I would probably look to be mostly out by, if it gets up to the $20 plus dollar range. I mean, if it goes even further, that's great. But I'm not necessarily looking to be holding the bag. And even still, that would be an incredible return from $1.60 up to, $20 plus dollars. We're looking at, like I said, 13, 14x. So Not too many opportunities out there to be able to do that. And it's really amazing and exciting to see some of these patterns play out and to show where we can hit some of those price targets. So drop a comment down below. Let me know what you think about this analysis. If you liked it, if you learned something new, then I'd appreciate it if you hit the thumbs up button and subscribe for more content like this.